What is going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I like high income ETFs. I'm going to go over a few of them that I've been buying, and hopefully my options income ETFs will be buying. So these are ETFs that I'm going to be going heavy in, and I have a high percentage of my M1 Finance pie with these ETFs. So let's check out these ETFs right now. First one I want to cover is the NEOS Bitcoin High Income ETF. It's sitting at 61.19. This one has done very well distribution wise, and it has really helped turbocharge my dividend portfolio. And actually in the past year, it's up 23.82%. So a lot of you that own MSTY, I guess I'm right, looks like the trends are starting to go in the BTCI route. We have a monthly distribution and expense ratio of 0.98%, a distribution of 28.07%. Seeks to distribute monthly income generated from the writing call options on Bitcoin futures ETFs. So it's an actively managed by NEOS. The fund seeks to offer upside potential via efficient exposure to Bitcoin ETPs. The fund implements a data-driven call option strategy, saving investors the time and potential expenses of trading the options themselves. So again, we have an expense ratio of 0.98%. And again, the high income ETF seeks to generate high monthly income with the potential for appreciation based on exposure to the exchange traded products, ETP. So it doesn't have direct, these have direct exposure to Bitcoin. We're not investing in Bitcoin. So I want to be clear with that. Now, we have some very nice distributions, and this is what I really like with these ETFs. So let's just go. In January, 157, February, 143, March, 133, April, 125, May, 151, June, 139, July, 147, and in August, 141. So I didn't want to round it. But so you have a pretty decent range. 125 to 157 is a pretty good range to have distribution of BTCI. That's one of my favorites. Let's jump to the next NEOS ETF. And another one that's done really well is the NEOS S&P 500 High Income ETF, or SPYI. I feel a lot more confident in these type of ETFs as compared to the Yield Max ETFs. They're way better. Their distribution has been better. I like them better long-term over ULTY. This one has a monthly distribution. Its distribution rate is 12.19%. The expense ratio is 0.68%. Fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven call option strategy. So again, actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing the SPX index options classified as Section 1256 contracts, which are subject to lowered 60/40 tax rates. Now, what's in this, which is nice, okay, it has done pretty well, which is pretty nice. It's been better than CBOE S&P 500 buy right monthly index. It has a pretty decent distribution, 51 cents pretty much. 51, we see 51, I'm not going to round, 51, 51, 50, 46, 50, 50, 51, 51. So that's pretty nice. That's a pretty good distribution of 12.19%. Here's some of its holdings. NVIDIA 7.7%, Microsoft 6.84%, Apple 6.4%, Amazon 3.99%, Broadcom 3.07%, Meta Platforms 3.04%. We got GOOG and GOOGL 2.66 to 2.15%, Tesla to 2.14%, and Berkshire Hathaway, Berkshire B 1.64%. So has some pretty good holdings to keep the NAV pretty nice. Now let's jump to its one more NEOS ETF, and I think all of these are better than ULTY, to be honest with you, long-term wise. And again, QQQI, the NEOS NASDAQ 100 High Income ETF, sitting at 54.13. This one has done extremely well as well, and it has a very nice distribution. Let's go over that. This one has a higher distribution that's monthly and with an expense ratio of 0.68% and a distribution rate of 14.42%. This one seeks to distribute high monthly income generated from investing in the constituents of the NASDAQ 100 index and implementing a data-driven call option strategy. So its expense ratio is 0.68%. Now let's jump to some of its holdings. The NAV has done extremely well. Okay, so the CBOE NASDAQ 100 buy right monthly index has not done well against QQQI. So that's one thing to take notice. QQQI is a distribution is around 62 cents, 61, 58, 53, 63, 62, 63, 62. So that's not bad. A distribution rate of 14.42%, which is pretty nice. So let's jump to ULTY and MSTY. So ULTY is actually starting to maybe make a comeback, which is not bad. But again, long-term wise, I don't know about them versus the NEOS ETFs. So again, we're seeing in 5 days a good upswing. Past month, it's still been down 4.24%, which has me a little worried. And then the past 6 months, we're going to start in April soon, is at 545. And again, it got to the point where it was 640, making a comeback. But right now it's 565. So I don't know how things are going to look long-term wise. And again, MSTY is starting to drop significantly as well. It's 1563. The past year, it's down 24.27%. So if we have something that's not really doing well and jumping up in NAV, if MicroStrategy isn't doing well, MSTY is not going to do well either. Remember, these are synthetic calls. And this is why I like the portfolio options income ETFs. The NEOS have done very well. MSTY, ULTY, they're not the best for retirement, if you ask me. Now, MSTY and ULTY, can I buy them, rebuy them, sell them? Yes, I've done pretty well with making a profit with both of them combined. Took a little bit of a hit with ULTY. That's not really significant. I've made a lot of money with ULTY, but I just don't know long term how ULTY is going to stand if things go bad. Same with MSTY. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money, so be aware and do your due diligence. Go to a financial advisor for financial advice. Go to a tax advisor for tax advice. Just being very straightforward for you. These videos are strictly for entertainment purposes only. Take care and have a good one.